Welcome back to Investing Talk Podcast. We are so glad you are joining us today.
It's great to be here. We've got some interesting ground to cover.
We certainly do. You've pointed us towards a clinical stage biotech called Tempest Therapeutics, and we're going to unpack what's going on there.
That's the plan. We'll look at what they do, their recent activities, the kind of environment they're working in, really get a clear picture based on the information available.
Basically, a focused look to get you up to speed on Tempest right now. And hey, while you're listening, if you find this useful, please do hit subscribe, give us a like, maybe drop a comment. It really helps us keep doing these analyses.
Okay, so Tempest Therapeutics. Let's start with the basics. What kind of company are we talking about?
Well, they're described as a clinical stage biotechnology company. That means they're primarily in the research and development phase.
And their specific area is cancer treatment. They're working on developing small molecule therapeutics.
Right, small molecules. These are often the kinds of drugs that can potentially be taken as pills, chemically synthesized, rather than, say, large biologic drugs. Their whole approach seems to be about advancing treatments that target cancer in specific ways or use the immune system.
Targeting unmet medical needs is the phrase often used. Trying to find better solutions where current options aren't enough.
And the information highlights a couple of key product candidates in their pipeline. Amezalpat is one.
Also known as TPST 1120. And another one mentioned is TPST 1495. These seem to be their leading programs right now.
So pipeline just means the list of drugs they're currently developing and testing in clinical trials. They're not selling these yet.
Correct. They're working through that long, complex process, testing for safety, testing for effectiveness, hoping to eventually get regulatory approval.
So what's been happening recently? Any signs of progress?
Yes, there have been some notable updates. Let's start with Amezalpat. There was news on June 5th, 2025.
Okay, what happened?
Tempest received orphan drug designation from the European Medicines Agency, the EMA.
Orphan drug designation. That sounds important. What's it for?
It's specifically for Amezalpat in treating hepatocellular carcinoma, or HCC.
HCC, that's a type of liver cancer, right? Getting that designation from the EMA, that's generally seen as a positive step.
It really is. It acknowledges the potential of the drug for a serious condition and can come with benefits like market exclusivity if it gets approved. And it seems they have FDA designations in the U.S. too, so recognition from multiple regulators.
Okay, so regulatory recognition. Are they also sharing the science?
Good question. Yes, it looks like they presented new data on Amezalpat's mechanism of action, basically how it works, at a major cancer conference, the AACR annual meeting, earlier in 2025.
AACR, American Association for Cancer Research. So presenting there helps validate their scientific approach to other researchers and, well, investors too.
Definitely. It builds credibility. And speaking of moving forward, the information also points to them gearing up for a pivotal Phase 3 trial.
Phase 3 for Amezalpat, what for?
For that same indication, first-line treatment of HCC, the liver cancer.
Wow, Phase 3 is usually the big final study before you can potentially ask for approval. Moving a drug into Phase 3 suggests, a fair amount of confidence from the company.
It's a major step, a significant investment. Beyond Amezalpat, there was also a mention of their Q1 2025 financial results and a business update back in May.
What did that say? Anything interesting?
It mostly reiterated progress across their whole oncology portfolio, but there were a couple of financial details noted.
Like what? We should probably touch on the financials, even if briefly.
Well, the net loss per share for the first quarter of 2025 was reported as $3.16.
Still a loss, which is expected for a company at this stage, but how does that compare?
The point highlighted was that it was lower than the loss in Q1 2024, which was $4.62 per share.
Huh. So the loss per share actually decreased year over year based on those numbers. That could be seen as maybe slightly positive financial movement, or maybe just shifting R&D costs.
It's hard to say without more context, but it's a data point. They also mentioned repaying a $3.5 million loan.
Managing debt is always relevant for companies burning cash in development.
It suggests they're keeping an eye on their balance sheet.
Now, on the broader financial picture, it was clear that detailed revenue figures weren't really provided, which, again, makes sense.
No approved products, no sales revenue yet. And because of that, and the net losses, standard metrics like PE ratio, price to earnings, they don't really apply or can't be calculated meaningfully.
Right, no E in PE. Same for return on equity, ROE, it would be negative. Was there anything on cash flow?
Things like free cash flow or FCF and beta values weren't explicitly detailed in the snapshot we saw. For that level of detail, you typically need to look at their official SEC filings.
Okay, and dividends. Are they paying any?
Doesn't look like it.
Yeah.
Which is very typical for clinical stage biotechs. They usually reinvest any available capital straight back into research and development.
Which is exactly where the potential upside is, but also where the big risks lie. Let's talk about those risks and challenges.
Yes, this is the important counterpoint. The biggest red flag, if you want to call it that, is simply the nature of being clinical stage. Their success hinges almost entirely on these drug programs succeeding in trials.
And drug development is incredibly risky. Failure rates are high at every stage.
Extremely high. So regulatory risk is huge. They need the FDA, the EMA, and other bodies to eventually approve their drugs based on the trial data. That's never guaranteed.
Well, competition.
Definitely. Cancer therapeutics is a very crowded and fast-moving field. The notes mentioned competitors like Segan and Mirati Therapeutics as examples. They're up against established players, some with deep pockets.
And the cost of running these trials must be immense.
Astronomical. That's another major risk factor, highlighted the sheer expense of clinical development. If a late-stage trial fails, that's a huge amount of capital gone.
There was also something about a management change recently.
Yes, on June 5th, 2025, the same day as the EMA news, actually, it was announced that some key executives were transitioning into consulting roles. The stated reason was that the company is exploring strategic alternatives.
Strategic alternatives. In biotech, that can mean a lot of things, can it? Partnerships, licensing deals, maybe even looking for a buyer.
It can cover a range of possibilities. The information presented it factually, but it's certainly a significant development that adds a layer of, let's say, strategic consideration on top of the clinical story.
Interesting timing. Any other risks mentioned?
Just the broader macroeconomic factors, things like the general economy, funding environment for biotech, healthcare policy changes, these can impact the whole sector.
Okay, so a lot of hurdles, but it's not all risk. What about the strengths? What's the potential upside here?
Well, the core potential comes back to that pipeline. Having promising candidates like Amezalpat and TPST 1495 is the main asset. Multiple shots on goal, so to speak.
And that orphan drug designation we talked about, that's a strength, right?
Yes, it provides that potential period of market exclusivity in Europe for HCC, which is a real competitive advantage if they get approved. It's a valuable regulatory incentive.
Exclusivity can be very valuable financially. The notes also suggested their candidates might be first in class. What does that mean?
First in class implies they might be targeting a disease mechanism in a completely new way, one that hasn't been drugged before. If they can prove that works and is safe, being first can be a huge advantage.
A potential game changer if it pans out. Anything else on the strength side?
Strategic partnerships were mentioned as part of their edge, although we didn't see specific details on current partnerships in the material provided. But collaborating is often key for companies at this stage.
Okay, so the potential is there, driven by the science and these strategic elements. Let's look at the market context. How does Tempest fit in?
As we said, it's a highly competitive cancer market, lots of innovation, lots of players. The stock price was noted around $8.25 as of early June 2025.
And it sounded like recent news, like that EMA designation or the strategic review announcement, might have influenced the stock price.
Very likely. Biotech stocks are often highly sensitive to clinical data releases, regulatory news, and corporate announcements like that. Sentiment can shift quickly.
What about overall market sentiment towards Tempest? Did the info give a sense of that?
It's suggested recent progress, like the EMA designation, probably helped sentiment, but we didn't see specific analyst ratings or, social media buzz levels detailed.
So what are the key things to watch for next? What are the upcoming potential catalysts?
The big ones are definitely more clinical trial results, data readouts for Amezalpat, especially from that planned phase 3, and for TPST 1495 will be critical.
Positive results there would be huge. Negative results, not so much.
Precisely. Then, any further steps on the regulatory front moving towards submissions if the data is strong. And of course, any news related to those strategic alternatives they mentioned. Partnerships, deals, M&A activity, that would be significant.
It seems like there are several potential inflection points coming up. There was also a mention somewhere of a hold recommendation.
Yes. One source seemed to summarize the situation with a hold, which kind of reflects that tension we've been discussing, the clear potential, but also the very real risks and uncertainties involved at this stage.
It captures that balance, or maybe imbalance, between hope and risk. Okay, let's bring this back to you, the listener, who brought Tempest to our attention.
When you're looking at a clinical stage biotech like Tempest, based on what we've seen, it really is about tracking the science and the clinical progress. How are the trials going? What does the data show? What are the regulators saying or doing?
It's less about traditional financial metrics right now and more about those milestones. And critically, always keeping those inherent risks, trial failures, regulatory setbacks in mind.
The potential rewards in biotech can be high, but the risks are equally significant. The information provided gives a good snapshot of where Tempest stands on that spectrum right now.
It highlights the key plot points in their ongoing story.
Helps you follow along knowledgeably.
So wrapping this up, the picture of Tempest Therapeutics we get is one of definite excitement around candidates like Amezalpat, boosted by things like the recent EMA orphan drug designation.
But that excitement is tempered by the inherent challenges of this industry. The make-or-break nature of clinical trials, navigating the complex regulatory pathways, and competing in a very tough market.
It really is that classic high-risk, potential high-reward biotech scenario. And maybe here's a final thought, something to mull over based purely on that June 5th announcement.
The one about exploring strategic alternatives.
Yeah. Given that the company has explicitly stated they're looking into strategic options, while simultaneously pushing Amezalpat towards a phase 3 trial, how might the results of that trial or other upcoming data directly influence or interact with any potential partnership or even acquisition talks?
That's an interesting point. Positive data could strengthen their negotiating position immensely, or perhaps make them a more attractive acquisition target. Negative data might push them towards a different kind of deal out of necessity. The clinical progress and the strategic review are now very much intertwined.
Something to keep an eye on, definitely. Well, thanks for tuning in for this exploration of Tempest Therapeutics.
Indeed. Thanks for joining us.